You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday, 24th day of September, 2019. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. I'm going to put up a chart, something. There we go. How about bonds? 30-year bonds. Okay, if you can't see the chart, go to our homepage at CFRN.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. On the days you're out of the office, away from the desktop, not to worry. Just point a browser, any internet-connected browser, to youtube.com/CFRN/live, and there you will find a live, real-time simulcast of the show as it unfolds, brought to you by the good folks at YouTube. Thanks, YouTube. Okay, Michael was out this morning. Valerie did a sterling job. Hey, wait a minute. I can do better than that. No, really, I can. But she did a fantastic job. If you weren't there, shame on you. You should have been. The crowd went wild. Yes, they did. She'll be on in just a bit, and she'll run over, she'll hit the highlights of everything that happened in the live training room today. Let's take a quick look here at, let's look. I think we'll go here. No, we'll go here. And we're going to turn this into a daily chart. We're going to make it the S&P. Here we go. Daily chart, S&P. 500 Emini Futures. Now, the most recent all-time historic high in the S&P, right here, on July the 26th, 30.32 and a quarter. Here, looked like we were going to take out that high. We got up to 30.25.75, but we weren't quite able to do it. Now, we talked about, well, what happens if we do reach it? What if we challenge it? What if we overcome it? Well, the only thing we have to base such a thought on would be history. Yes, past performance is no indication of future results. However, you don't really have much else to go on. So if we challenged it, even if we overcame it, we expected to see, yeah, kind of what we're seeing here. It's what we saw here, and here, and here, and again here. This time we did it without actually challenging the high or putting in a new nominal high. So, with that said, let's draw some quick fibs from this low to the most recent swing high, right there. Now that puts our 24% Fibonacci retracement at 29.67. Got a 38% retracement down at 29.31, and then the 50. The 50's here at 29.01. Now let's add one more element. Here it comes. There it is. Aha. That adds a lot of clarity, doesn't it? Because before I added our indicator, it could have been the 24, could have been the 38, could have been the 50, could have been the 62, and it still can be. However, we see that right here at this 24% Fibonacci retracement, just above it, we have our BBC, just stands for Bull Bear Cross. That's all. BBC, Bull Bear Cross. What does that mean? Well, when price is above this green line, we're bullish. Doesn't matter what time frame we're looking at. A daily, like we're looking at right now, a 5-minute, a range chart, a volume chart, any chart. When price is above the BBC, we're bullish for the time frame being referenced, and we anticipate higher prices. You can see that that worked out pretty well here. When price gets below the BBC, well, we anticipate lower prices, and again, you can see that worked out pretty well. Back above, we got back above June 6th, and we stayed above until July 31st. we closed back below the BBC. You'll notice here, our first candle closing below, right there, May 7th. Then our first candle closing back above, June 6th. Our next candle closing back below, July 31st. And we actually had a candle here that closed above, but then the next day we immediately reversed, went back down to test this support area here. That would be the support area right here. Okay, we hit it, we bounced back up to the BBC, we hit it again, bounced back up, hit it again. This time we got back through. Okay, this time we closed above, stayed above. See how it got pinched right there between the CFMA1? When that thing's blue and climbing and price pulls back to it, look for it to be good support. Okay, and the opposite is true. When it's red and falling, okay, like here. Okay, so we get through, we make a run, we're unable this time to put in a new all-time historic high or even fully challenge the previous high. So we're pulling back now to the BBC. Price always reverts to the mean. You see it here, you see it here. You see an attempt here, you see it again here, and then you see it here, here. This time the pullback did not hold, which put us on the north side of the BBC, which led to this rally. Keep in mind, we're looking at a daily chart right now. Everything I'm saying, all of the principles are the same no matter what type of chart you're looking at. We're on a daily right now. So what is the next high probability thing for the market to do? If you see the chart the way I see the chart, we are pulling back right now to the BBC. Now, where is that? 29.75. And do we have a weekly trading zone at that number? Not exactly. Do we have one close? Yeah, we do. Now, the zones you see on the chart today during the show are last week's weekly trading zones. The reason you're seeing last week's zones, partners and passport holders receive the weekly trading zones every Monday morning, 6:15 a.m. Eastern. It gives everybody a chance to get them on their charts before Wall Street even wakes up. I do reveal the current weekly zones to the entire audience, the entire CFRN community, every Thursday. Typically throughout the week, I leak a couple out along the way, but it is for the partners, it is for the passport holders. This is why I hold it up from just dispensing it globally until Thursday. That's commercials say membership has its privileges, and that's a privilege. Okay, so we come back, we touch this BBC, which certainly looks like the next high probability move. We know we've got weekly trading zones below us. One of those will most likely serve as good support. And when we pull back to the BBC, what's the next high probability move? Once we find good support, very possible we could have a down day tomorrow that not only reaches the BBC, spikes it, touches that 24% Fibonacci retracement, and does one other thing. And this is really the primary reason that I think the scenario I just discussed will come to pass. Look right here. What is that? That is the last bearish cross on a daily chart. It lines up perfectly with that 24% fib. and it's just below the BBC. The high probability thing is we will most likely continue down today, into the night, into tomorrow. Okay? Now, this is not a forecast. I'm simply telling you what I see as the next high probability move. And that's what you learn when you become a CFRN partner or passport holder. You learn to not tell the future. We don't turn you into a fortune teller. We teach you how to read a chart and understand what the next high probability move is based upon the principle upon which the market operates. See, once you understand how markets work, everything else just starts to kind of fall into place. It's a beautiful thing. All right, so let's say that is what transpires. Price does continue to drop today into tomorrow. Now, I'm not going to rule out that we could hit it today. We could. We may. We'll see. Could it even happen in today's broadcast? It could, right? Embrace all possibilities. So once we reach the BBC and spike to this little area here, this 24% fib, and really critical, the price at which the bearish cross took place. That is an important price, important area. And you know what I say about those? They're almost always tested. So we come down, we test, we should catch a bounce, a nice bounce. Define nice. Probably more than 2 points. What happens next depends upon how committed buyers are to their position. It's always about buyers and sellers. It's always about the order flow. The only thing that has the ability to move price on this chart is order flow. Order flow is the action of buyers and sellers. The president could come out right now and make a tweet, right? Or he could tweet, I guess that's a proper way to say it. He could tweet right now something the market likes or doesn't like. And it sure looks like his tweet moved the market. That's what they'll be talking about on TV, on the financial shows, the financial channel. Oh yeah, the president tweeted blah, blah, blah today, and it sent the market so many points higher or so many points lower. That's not actually true. It's kind of true. Here's what really happens. He tweets, market participants, buyers and sellers, digest his tweet, and then they react. They react by either buying the market or selling the market. If more traders decide to buy the market than sell the market, price is going to go up. And if more traders, after they interpret the tweet, decide that that's a bearish tweet, and more traders sell the market than buy the market, price is going to go down. So what actually moves the market? Is it the tweet? No. Tweet is fuel on the fire. The tweet gives traders something to digest, something to base their action on. Sunday night, yesterday, pretty quiet sideways action. We'll look at it in a moment on a smaller time frame. But if you can file that away, that little factoid, okay? Tweets don't move the market. Economic reports don't move the market. The Fed doesn't move the market. Buyers and sellers. Now, the buyers and sellers can be people just like you and I. The buyers and sellers could be institutions. And the buyers and sellers can be algorithms, computer programs that were, of course, programmed by man to do whatever it is man wants them to do under a certain set of conditions. So this order flow of which I speak, come on, order flow, show us your flow. There you go. Here's flow, not the Geico flow. Is that Geico? That's one of those insurance. Buyers, sellers. There are some trading methodologies and strategies that incorporate volume analysis. Some call it volume spread analysis. In other words, how's the volume spread out here? We got more buyers or sellers. Now, this is information, but it's rarely tradable information just looking at it like this. Now, the more in-depth way that some traders have of looking at volume, just to clear the air, I don't look at volume. When I'm analyzing a chart, analyzing a particular market, in futures, volume does not enter the picture for me. If I were analyzing an individual stock, then yes, volume is a fairly important part of the equation, especially on thinly traded stocks. Okay, when you have a big price move on light volume, well, that speaks volumes, right? But that's with equities, individual stocks. The futures, I see it as a different animal. Now, I'm not saying the other folks who view it differently are wrong, because that's how they see it. We're all unique. We have our own, we each have our own ability to see the market through the eyes God gave us. What we often need is just more information about what it is we're seeing. What does this mean? How does this translate into this? Oh, guess what? We just hit the BBC. Maybe we better go look at that short-term chart right now. Yeah, buddy. Okay. I was cutting the market some slack. I was thinking, yeah, maybe later today, but, tonight into tomorrow. But you see, when the market makes up its mind to get up and go somewhere, that's exactly what it does. It gets up and it goes. Gold's climbing, futures are dropping. What are you going to do? What you're going to do is you're going to analyze the market. You're going to look at the chart with a little bit of trading, with a little bit of help, with more information. These are no longer just random candles on a chart. Each little tick has its own meaning. However, if you get too close to the ticks, you can get caught up in what is often called the tick vortex, or I've heard it called the tick vortex, where you're so caught up in the minutia of what's going on, you lose sight of the bigger picture. That's why here on the show, we always like to go to a daily chart and kind of point out, like I just did on that daily chart, what's going on in the bigger picture. That will help you navigate the smaller time frame and have a clear understanding where the actual trend is. Because you can look on at a smaller time frame, a 1 minute, a 3 minute, a 5 minute, a range chart like we use in the live training room, and it can appear that the trend is definitely up. But then you go to a larger time frame and you can see that, yes, see, price is always channeling back and forth, just like you see on this chart here. Leg, retrace, leg, retrace, leg, retrace, leg. Now this is 30-minute, okay? Each one of these 30-minute candles has a host of activity going on inside of it. It's good to know what's happening inside of this 30-minute candle, it's good to be able to recognize the movement, understand what buyers and sellers are doing, what action they're taking, and what their goal is. What's the end result? Now, these are zones from last week on this chart, 1523/24. The zone above that, now again, last week's zones, is 1552/53. When we left this zone, and we talked about this yesterday, okay? When we hit this zone, when we approach a zone from below, we expect it to be good resistance until it isn't. And it was. And it sent price back to the zone below, which was good support. That's what we anticipate. Sent price back up to the zone. Then we consolidated. The most likely thing to happen when price encounters a weekly trading zone is exactly what you see here, consolidation. Only two other things can happen. Right here is an example of rejection. Leg retracement, we retraced the BBC, confirming if it's going to be good support or not. The candle that comes back to touch that zone from above, when it leaves a wick in its wake, the way this one did, okay, that's a pretty good indication that it is going to be, in this case, good support. The opposite would apply if we were approaching from below. We pull back, we touch, the zone rejects price and sends it up from 1524 to 1534. That's a 10-point move. Gold pays $100 per point. This was a $1,000 per contract move. You may have heard me say before, important prices, important areas are almost always tested. Okay, there we go. So on this first little pop, now these aren't the Concierge Trade Alerts from last night. These are the ones from the night before. I'm still on the chart I was showing you yesterday. Okay, the initial trigger for 15. It was a Concierge Trade Alert 1527. Made it up to 1528.70. So that's $170 per contract traded. We get back below the trigger, test for good support, found it. Price was actually rejected by the zone. Sent it up to 1534. Now from 24, which is the zone, to the swing high at 34. That is 10 points at $100 a point, $1,000 per contract traded. The trigger was 1527. So from 1527 to 34, that's $700 per contract traded. And for the trader who's earned the right, and I can't stress earn enough, you must earn the right to trade multiple contracts. In fact, the way we see it, you have to earn the right to even go live. Otherwise, you've reduced the whole thing to gambling, and that's not what this is about. Okay, this is about short-term investing. Okay, all right. As we pull back on this first pullback, the market's pretty bullish. Now, did we just stop there in thin air for no reason? Well, let's look at this. I'm sure you've heard it said, what was once good resistance can become good support. Okay, it was. Is there anything else going on here we should know about? Let's see. Okay. On this little pullback into this area, came very close to touching the BBC. And just as you see here, here, and here, when we pull back to the BBC, we expect it to be good support when we pull down to it from above, like we did here, and here, and here. On this little move, there was a lot of bullish enthusiasm, momentum, if you will, so price wasn't able to pull all the way back. Now, that says something, right? But then the market makes another statement. When you have a market that's not able to pull back all the way to the BBC, it might lead you to think that instead of what you see here, you're going to see something, like that. And often you will. But what you have to remember, sellers made a big statement right here. Look at this. Okay, here's the bullish cross. Okay, leg, retrace to the BBC. Leg, retrace. Leg, retrace. Leg, retrace. Buyers don't even give price the opportunity to pull all the way back. They're that bullish. But who's more committed to their position at this price? Certainly looks like the buyers are. But we fully understand that if we're going to go to that zone overhead, and price is always trying to get to a weekly trading zone from Sunday evening at 6 p.m. Eastern till the following Friday at 5 p.m. Eastern, price is trying to get to a weekly trading zone, either the one overhead or the one below. Now, there will be obstacles in the market's path. This was an obstacle. And by obstacle, what do I mean? Well, you've got sellers here who were keen to sell at this price. You also have buyers who, even though they're bullish, they weren't as committed to their position as the sellers. Leads to this. Here, it leads to this. Okay? So we go back to the trigger. Important prices, important areas, almost always tested. We have a different dynamic now. We're approaching the BBC from below. When we approach from above, like a little bunny rabbit hopping down the bunny trail. Boing, boing, boing. But here, with this bearish cross, which takes us down to the trigger, whereas the BBC represented support here, now it's become an obstacle that must be overcome in order for price to continue higher. So we struggle a little bit, just bumping our head up against that thing. And then finally, whoa, okay, we broke through it. Price got back on the north side of the BBC, and that's bullish, right? It is. What's really bullish is if it can hold on a pullback, and it didn't. We were below, we were above, we're back below. Okay, that's a market trying to make up its mind. That's a market looking for direction. So price is jockeying back and forth. What ultimately happens is, right here, as we're getting that bearish cross, price takes a hit, comes all the way back to the weekly trading zone. Okay. Now, remember, this weekly trading zone that you're looking at was not calculated this past Sunday night. This zone was calculated a week ago, Sunday night. This past Sunday, go back to the 15th? Yes, September 15th. And here we are on the 24th. What is that? 9 days later? 9 days later, it's still doing its job. So we go back. We expect it to be good support till it isn't. It was. So nice bullish candle here. But we again have obstacles in our path. There's that one. Now, we take out this obstacle. This is almost a parabolic move here. Where's our pullback to the BBC? Well, we attempted one. What's the low of this candle right here? 1533.1. Okay. The tool tip there seems to be hung up. This market's really cranking. I just want to make sure that there was no wick hiding behind that. So this is a very bullish parabolic move. Could you be in this? As soon as this high is taken out, could you participate in that? Absolutely. Or you can wait for price to pull back like it did here and here and here. And then assume the position. The farther you get away from here, the greater the risk. Okay? All right. I'm going to stop right there. We're going to let this market unfold a little bit. Let me give you the numbers from around the world. I have a little bit of news. I'll give you that real quick. And then Valerie will do a recap of what happened in the live training room. She was running the show this morning. And again, she did a fantastic job. Let me give you these numbers. Let me refresh my data. Let's see just what this market's up to. All right. Cash markets around the world, starting here in the U.S. The Dow, down 175 points. NASDAQ, down 118. Make that 119. S&P 500, down 27. Russell 2000, down 18. Now, for the NQ, that's a drop of 1.5%. For the S&P, it's a drop of almost 1%. And for the Russell 2000, it's a drop of a little over 1%. In the commodity basket, crude oil down $1.01, trading 57.63 last. That's a drop of 1.75%. Gold up $6. Go gold, trading 15.3750 last. In the Asian markets, at the close, Nikkei up 20 points, Shanghai up 8, and the Hang Seng up 58. In the European markets at the close, FTSE down 34, DAX down 35, and the CAC down 2.5. No movers, no shakers in the Asian and European markets. It was a green day in Asia. It was a red day in the UK. And so far, or at this point, the picture has changed since the open. A news flash across my screen. The Dow falls more than 150 points as Democrats talk Trump impeachment. I don't want to get political right here, right now. I'll save that for when John comes on, I guess. But really? I mean, this spectacle of Bill Clinton trying to... That guy actually, he did something that's, not cool. There has to be an impeachable offense. I haven't seen one. And I'm wearing my bipartisan glasses here. I mean, I've really looked. I've tried to find an impeachable offense. I haven't found one. I'm not the sharpest tool in the shed, but I can't find it. I don't think those who are screaming impeachment, I think they're trying to distract us from the real issue. But I said I wouldn't go all political, so let me just stop right there. You've got your opinion. I've got mine. We can still work together and trade together. Okay? All right. Let me give you this little bit of news. Actually, I have a couple little bits of news, but I'm just going to give you this one right now. Patrick Byrne, longtime friend of CFRN, and the recently stepped down CEO of Overstock.com, online retail giant Overstock filed an S-3 form for the registration of its blockchain-based digital preferred stock with the United States Securities and Exchange Commission, which we lovingly refer to as the SEC. The news builds on previous reports that the firm was looking to liberalize its planned digital dividend shares trading. Huh? Right. Investment news outlet MarketWatch reported September 24th that Jonathan Johnson, Overstock's newly appointed CEO, Patrick stepped down, announced the filing in a statement. He said, "This filing represents an initial step in the company's registration of the Overstock dividend, and the company is engaged in active discussions with regulatory authorities to obtain approval for the registration. Overstock shareholders will receive 1 unit of the Series A1 preferred stock for every 10 common shares of the firm. But to get a hold of the asset, shareholders will first need to set up an account with Dinosaur Financial Group." I don't know who came up with that name. Dinosaur Financial Group? I guess they're real old school. They better watch out for meteors. You got to set up an account with Dinosaur Financial Group to access the Pro Securities trading system developed by Overstock's blockchain subsidiary, T0. Johnson went on to say, "This dividend will be a great introduction for many as to how blockchain technology can enhance the investor experience." You see where this is going, right? Patrick's always been a very forward-thinking, cutting-edge kind of guy. And he's almost always the smartest guy in the room. He's certainly always been the smartest guy in any room I've ever been in. I would put him up against Bezos, Tesla, their CEO. He's that kind of a thinker. Okay? He's honest. He's a good guy. He's one of the good guys. He really is. Now, he was not treated fairly by Wall Street when he took Overstock public. There was a lot of naked shorting going on in that stock because he chose to take Overstock public via what they call a Dutch auction. Now, when Uber, as an example, when Uber went public, did you have an opportunity to buy any of those shares before the IPO? No. Well, actually, there are some people in this audience who did, but most of us, myself included, did not have that opportunity. You see, those goodies are reserved for the circle of greed, the investment bankers, the Goldman Sachs of the world. Patrick wanted to give everybody a fair shot at what he thought would be a great company. It was and it is But because those investment bankers did not get to wet their beak before John Q. Public, they penalized him, they taxed him. During one of our early radio broadcasts, back in 2005, Mark Falk and I sat there. That's Mark of the Falking Truth. That's F-A-U-L-K. That's his last name, Falk. During a 2-hour radio show, we watched the entire float of overstock turn over. You can't make this stuff up. It happened. We saw it. It's in the record books. But did the SEC make a move? Even one. To go, hey, wait a minute. It's kind of like, let's say, I'm grasping for an analogy here, but I'll give you the best one that popped into my head. You want a car lot. You have 10 cars on your lot. Good for you. But yesterday, you sold 100 cars. Whoa, wait a minute. You sold 100 cars yesterday? Yep. But you only have 10. Shh, don't tell anybody. It's a criminal cabal. And long story short, it's why I left equities. Naked shorting was the primary thing that took me out of the world of equities and trading stocks into futures. Because futures is a purely electronic market. There is no market maker. There is no man in the middle looking to get fed. If I want to buy an S&P 500 Emini contract, I get the same respect as the guy from Goldman Sachs. I may be buying one. The guy behind me, the Goldman Sachs trader, might be buying 100 or 1,000. But it's a FIFO system, first in, first out. Anyway, I said all that to just say, keep your eye on what's happening here with overstock, these dividends on the blockchain. It's a glimpse of the future. I really believe that. Now, this isn't a suggestion to rush out and buy shares of overstock. Not at all. I mean, you could if you want. If you evaluate it, if you do your due diligence, think it's a great company, of course you can invest your money there. But as a model of the future, keep a close eye on these developments. And see what, now remember, this stigma, you would think, well, they've punished him enough now. No, I don't think they're done. Wall Street holds a grudge. So, all right. Well, I've just rambled on for almost an hour here. Let's go to Valerie, get a recap of what happened in the live training room. I'll be back in a few minutes. I'll ramble some more. I'll talk to John. We'll look at Concierge Trade Alerts. We'll look at Logic 247 alerts. And if you got a question, put it in the chat box. One of us will answer it for you. You ready, Valerie?
I am.
Sorry to keep you waiting so long. Time just slipped away.
That works.
As it does. You okay?
I'm good.
All righty. So let me give you the charts. Send them your way. Ladies and gentlemen, here's Valerie.
There we go. Hi. Well, this is my first time on the radio. Oh, yeah.
I hate it when my sound file doesn't play when it's supposed to. I'll save it for the end.
Okay, thanks. Some of you will know me as CFRN's client support person. I'm also a CFRN partner, former 8th grade teacher, and avid photo organizer.
Also known as the total package when it comes to trading. So keep going.
When it comes to, because I know more than an 8th grader. So today there's good news, bad news, and the truth about trading, as Dwayne likes to say.
Absolutely, the truth about trading. This is, guys, you know what? You can find a lot of stuff on the internet about markets and about trading and all that, but you're hard pressed sometimes to find the truth about trading. So when we have a good day, a bad day, an indifferent, it doesn't matter what kind of day we had. That's the truth about trading. And so when we come on this radio program, that's what we're going to talk about. Go ahead.
So I guess I'll just get started. This was actually the third time I've had the opportunity to fill in and facilitate the live training room for Michael when he's traveling and away from the computer. And so I really do take that responsibility very seriously, and the trust that he and Dwayne have placed in me to be the face of CFRN on these opportunities. So as the first two chances were really good out of the gate, and this morning you can see here, I'm going to go ahead and start with gold. My first trade was indeed a stop out, and I can't find my mouse. Okay, there we go. Okay, I better shut that one chart down. The YM is going crazy and it's taking my charts with it. So we went long here on gold, and we were stopped out, but then ultimately gold turned around and did try to make a higher high, and then it went down. Seriously, excuse me while I get rid of this other chart. Sucking up my power. Okay, hopefully that helps. So we looked for opportunities, and not too long over, just about 5 till 10 or so, I missed this trade because of, again, other things going on. We're looking at 4 markets during this time. And so bad news was I missed it. Good news is a number of our traders got this trade, got some profit, and that's a good thing. Price continued to move up and did not give us another opportunity to trade. You can see we were just going sideways here. Then price crossed back down. It looked again. There was an opportunity here to go long. I missed that. Some of our traders did get it and had an opportunity to get more points toward their daily goal. Price moved up. Price was moving up, as you could see from the 30-minute chart that Dwayne had on at the beginning of the show. We just didn't have an opportunity on the smaller time frame to take advantage of a lot of that. Price turned, came back down. There was a short trade here would have been 4 or 5 tick profit. Put in a new low, so you could have taken this short here, which did end up being a stop out. Price continued up here. There was an opportunity to pick up a few more ticks there, and then during the break, I guess this was during the beginning of the radio show, was an opportunity to pick up 10 ticks there on the gold. The euro, I don't generally trade the euro personally, and it has been moving pretty slow this past few weeks anyway. So picked up a few ticks here on the first trade, in this long trade here. Missed this opportunity to go short, pick this one up for a few ticks. And it was actually very, very slow. I mean, here we are on the screen, and this is like 6:30 a.m. To current time. So you can see there has not been a lot of price action or a lot of price movement here on the euro. Crude, which is Michael's favorite market. We had some high impact news today that came out at 10 o'clock, where some of our traders were able to take advantage of long trades and actually get their goal from the day. This first trade was for me on crude, was actually a stop out. It was the first trade we took this morning. Put in a new high, tried long again, but it did not pan out. That was a short trade. We spent so much time here going sideways. News came out. We had quite a bit of movement in the market with the news. Nothing that we could really take advantage of there. You can see, how many of these candles were formed very quickly. And so that is something that we stayed out of. There was a long trade here that I wasn't in. I'm going to go ahead and mark it here. And then we came to the downside. We had most of our traders having taken the first crude trade and second crude trade for a stop out, got almost their goal here on this trade while I was in the euro. I was able to go ahead and go short on this because we put in a lower low, looking to continue the trend, but it did not. Stopped out almost to the tick, and then crude did what we expected, and that was, come down to this weekly trading zone. We all know from the work that Dwayne does that the weekly trading zones we can use as targets. I mean, that's an expectation. And then for the next hour, crude just oscillated back and forth to and from the weekly trading zone. And again, that is expected behavior for price here, because consolidation is the first thing that we expect in the area of a weekly trading zone. So it was resistance, 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 and then it became support, support, support. And so crude really for the last hour of the training room didn't offer any possibilities for us there. And then lastly is the ES. Come on. This is crazy. Apologize. Okay, and here we are from the morning. Went short here with got a break-even trade. There was a momentum trade here that I was not in that gave some profit. Looking back at the time, I didn't really see the cycle as going against us in a 45-degree angle. So I took this trade short and came very close to stopping out, but instead made about 4 ticks profit there. Had another opportunity that I missed here. Most of the traders in the room who trade the ES picked up this trade and picked up at least their $100 per contract on that particular move. Here was another opportunity. again, down into the weekly trading zone, which we expect, which we can use as a target in our trading, even on the smaller time frames. Acting as support here, and then moving forward, I got a break-even trade in anticipating of price going to the higher weekly trading zone. Took this trade long, and it ended up stopping out. During the break, there were a couple of short trades here, and that brings us to current time. So in the trading room, I took 11 trades. And had a red day at minus $220. The good news is our traders did much better. And that's it. Dwayne, are you ready? Questions? Thank you. I'll tell you, I relish the opportunity, but it's a lot on my shoulders, and I loved it. And thanks again for the opportunity to participate.
No, I just want to say, learning how to trade is a challenge in and of itself. But to do what you have done in the period of time that you've managed to do it, to go from someone who, when we first met, really didn't know about trading futures, and then the progress that you've made since December of last year is nothing short of phenomenal. It's one thing to try to learn how to trade in a consistent manner, but to be able to do it in front of other people, with people looking on, and then trying to answer questions and all of that, you know, I know a handful of people capable of doing what I just said and doing it well, and you are now in that Hall of Fame.
Well,
now,
thank you.
I'm not just blowing smoke up your chimney. Everybody out there, if you've never, well, those of you that trade, but you're not doing a radio broadcast, or you're not training or running a room, just think about how it is when your spouse or anyone else, a coworker, comes over and starts looking at your chart. Hey, what you doing? Hey, what does that mean? Oh boy, that opens up a whole nother closet full of demons. So, good job, Val. I'll leave it.
Thank you.
I don't want to embarrass you, so I won't keep gushing. All right. But I'm just real proud of you. You've done.
Thank you.
You've done something that most people won't do, because most people just wouldn't even attempt it. It's just too much of a stretch. But you had a good teacher, no doubt about it. Michael taught you very well.
I did. I agree wholeheartedly. Okay, beautiful trade there on the gold.
Yeah, gold went higher, huh? Let me take these charts back. John called me. Oh, you know what? I tried listening in from my phone. This morning in the training room, I ran the GoToWebinar app on my phone, and I could hear you perfectly. Just now, when I logged in, I could see the charts, but I couldn't hear you. So it's nothing you did wrong. It's something between my phone and the app. Because as soon as I got back to my desk and put my headphones on, I could hear your voice. In fact, I came rushing back because I thought maybe something had gone wrong, but no, it was my app. No, you.
Okay.
You had it. Okay, so can we get charts? We got charts.
There you go.
All right.
You're back in business.
Okay, so John called me. Let me see if he's popped in yet. Yeah, there he is. Okay, guys, we're going to talk to John here for a few minutes, and then when he's done, I'm going to run through the Concierge Trade Alerts and the Logic 247 fairly quickly, okay? Because I have an appointment but I've still got, an hour before I have to head out. So with that, let me open up John's mic. John, are you there?
Hello.
Hey, John. Thanks again, Valerie. And John, welcome to the show. John? Oh, John.
Hey, yeah, good
There you
morning.
go. Hey.
Good job, Valerie, by the way.
Yeah, it's a fantastic job she's done. Fantastic. So go ahead, John. What chart you want to look at first?
Well, this is there's so much going on today.
I'm telling
We
you.
put out a tweet probably a couple of hours ago now to sell everything and go long the VIX, the TVIX, and go long gold, which we're already long, but we just wanted to add to the position. And so far, it's worked out pretty well. As I said yesterday, even though we rallied a bit afterwards, and they turned out to be selling opportunities both times we rallied. I did say I was looking for a kind of a down spike going into October, and unfortunately, that appears to be what's happening right now. I think the noise regarding Trump's issue with Ukraine is actually partly to blame for this sell-off. I think that the people are worried that there may be more to this than storm in a teacup.
What do you think, John?
And it could, this. I mean, look, they're throwing. They just found another kitchen sink to throw at him, and this sort of amplifies their impeachment call, and they got more people calling for that right now. They don't have 218 yet, but they're 143 or something. So that's up from 100. That's quite a big deal. And on face of it, it doesn't look very good. I would have thought after, 2 years of the Mueller report, talking to anybody overseas about anything to do with elections would be a no-no. It's probably backfiring on Joe Biden, and it may put him out of the race, actually, which is probably what they want anyway. But I think this is a very unsettling development, frankly. And I sort of talked to some people about it last night, told them to be ready to sell the market because it really looks dangerous to me, actually. We've got a little double foot, 2 feet sticking down on the TVIX on a weekly basis. We're pushing higher on a daily basis. We're not really in a kind of a look. The upside potential on the TVIX is quite something. It could really run up a lot, and the UVXY as well. They're like peas in a pod. The gold, the fact that the gold is, by the way, the dollar's tanking today. Again, it's coming down from a higher level again, so it's no big deal yet. It's not breaking down yet, but it could be the beginning of a breakdown, which I think would probably be helpful to the gold and silver and the metals. Incidentally, we did talk about palladium hitting new highs. With a potential objective of 2,000, 1,800, I guess, and 2,000, just hit a new high this morning, 1647 or so. That's pretty big, considering our original call at 800, calling for 1,600, as a sort of interim objective, 6 month to a year objective. Volume is very strong on the palladium today. Gold, back up to 1541. That's highly impressive. After silver's big advance yesterday, it's actually down a bit today, so that's not so great. Always got to be a little bit careful of the gold when the silver doesn't confirm. The breakdown in the Russell is pretty dramatic today, down 26 points. The Nasdaq already down 127 or so, the S&P down in the 30s, and the Dow down a couple of hundred. Remember, the Dow is the kind of the last man standing at these tops, which have we've been identifying, and I think Garrett's work, if he was on today, I think he'd be concerned because everything's breaking down. Europe, Nikkei, Chinese markets, the whole 9 yards. And Trump gave a pretty good, I haven't finished listening to the whole speech this morning, but he gave a pretty good speech at the UN, at least what I've heard so far.
I caught part of it.
Yeah, and it was pretty measured, and it was maybe one of the better speeches he's ever made.
Yes, I agree. There was no. He was on his best behavior.
I know that Trump probably sees that you have to beat people over the head and get them for them to get the memo, and that's probably behind a lot of what he says. But if he just kept quiet, he'd get all the compliments anyway, because he's really doing an incredible job. Yeah. And he made a point of that, saying that this morning without hyping it. And I thought, and I think people would say, well, it was well done, well presented, and he gave them the facts. He doesn't have to kind of praise himself. I think people get a bit turned off by that from time to time. So anyway, the grains, are holding their gains at the moment. The meal is acting a lot better, which, as I said to you last week, is an important. It's actually ahead of the beans. It's actually stronger than the beans, and that's generally a good sign when that happens. So, I think, and I think some of the points that Trump made towards Iran and China and that were kind of just the right tempo kind of thing. There was strong and factual and made the point pretty well. But the surprising thing is the market is selling off after the speech, which is a bit of a problem as well. That actually is the first time I've seen the market sell off after a Trump speech in a long time, actually. So. These are things to be worried about. One of the utilities index is making new all-time highs. It's actually been in a stealth bull market that nobody noticed, and it's just been going up dramatically. That's probably a good thing. It may mean that there's it may be a leading indicator of the rest of the market, which, following this correction, may get back on track. You've probably got the Fed doing things as well. Don't forget these things, these repurchase agreements and all that, may be short-term negative. And I think the trade issues, the problem we've got right now. Look, I actually think this market's quite dangerous today because it's sort of come out of nowhere. It's gathering momentum to the downside.
The Russell was really leading. There was a tip-off there this morning when the Russell tanked.
Right, and I've been talking, if you remember, just over the past week, I did say that we were making a kind of a right shoulder, a sort of a little top formation that was quite bothersome if it were to break down. It would be a go with trade, and unfortunately that's what's happening. And look, it's Wednesday. What is it? Tuesday. Mm-hmm. So the fact that this is happening on Tuesday is another. If you remember what I said last night, if it comes in higher on Sunday night, can't sustain it. It's a bit of a problem. Then late yesterday, the VIX started rallying right into the close. That was that's what I pointed out to a few people last night. It was a bit of a problem. VIX came in a bit lower this morning, but it was really a buying opportunity. Now, potentially solidly upward, and is at the moment is a three-wave upward correction off the lows, all-time lows for that matter. But so this is a critical point. Is the market going to try and reverse here, or is it going to keep going? Honestly, the way this is shaping up, it doesn't look like that's going to happen. And if the VIX starts extending its gains and the market starts to, continue to go lower, maybe even accelerate lower, I would consider that to be extremely dangerous, because we could have a kind of a mini 87 type scenario here. where we come in tomorrow, maybe weaker again, and then you've got to get Thursday, Friday, and then you've got the end of the month, Monday and Tuesday. So, my bottom actually that I talked about a week ago is October the 2nd, so that would be Wednesday, I think. So that's a week from today, possible. It depends on how much the market goes down. Remember in '87 when it did have a crash, it was all over, by the 20th of October, and that turned out to be the biggest one-day rise in history. So, even though this is happening right now, and depending on how far it goes and what sort of you've got to be looking for a potential opportunity to get long ahead of what could be a 3-month recovery or even a 6-month recovery into next year. If this impeachment thing blows over, that would be probably could give the market a lift. The Fed may step in. Who knows? Anything could happen, and they may make some deal with or some talk with Iran could come before the end of the week, which might also help the market. So, you've got to consider all these factors that are, I'm already short from this morning. I'm not sure if I'd be adding to shorts here because there's always a chance of a bounce or something.
Well, we've caught a pretty good bounce, John. We got down to the swing low so far here on the S&P, 61.25. We got a weekly zone. One of this week's weekly zones is at 60/61.
Yeah, I don't like adding to shorts, after a big rundown because it's just like.
No, I agree. Chasing price is one of the worst things a trader can do.
Yeah. I really don't do that. I almost never do that. So, you wait for a rally, and if the rally fails, then maybe do that after that.
Yeah, we caught a nice 7-point bounce here so far. We bounced from 61 up to 68.5. We were looking at the daily chart earlier. At the beginning of the show, I was walking everybody through the daily chart. This daily candle, we had not taken out yesterday's low when I started talking. And I said, I think, later in the session today, tonight, into tomorrow, I think we'll come down and challenge this 24% Fibonacci retracement and the BBC. Lo and behold, within 5 minutes, what I thought was going to happen tonight or tomorrow, bam, it was right there.
Well, it's interesting that what was bothering me about this right hand shoulder, if you like, is that it was more volatile. Look at the sort of cells. The cells have been kind of problematical, a bit much more extreme than the last time, even though the last time resulted in a pretty big pullback. We could get a pullback that might take us back to 27.30, somewhere like that. Or it may be more short. Maybe just come down to about 29.40 or so. That would be the preferred level for it to turn around, because if this thing does reverse and gets some traction and back up to sort of 3,000, I think the situation could turn very bullish indeed. But there's a lot hanging on the look, there's some of the data's come in very well in the last few days, but then there's this sort of just global slowdown. There are pockets of places around the country. Look at this Thomas Cook thing failing. Jesus, that's 30,000 people out of work, and that's just not Thomas Cook employees. Think of all the support systems around the world for that company. I can't believe that the British government didn't bail them out. They should have done that. It's a 100-year-plus company. A couple of $1 billion would have fixed it. It's just probably spent that in flying people back to the UK. You got to fly 600,000 people back to the UK. It's kind of like crazy, it's gonna actually impact a lot of things. It's going to put a whole bunch of jets on the market. It's going to that could affect new jets coming off the production line, things like that. So disappointed really that they didn't come to grips with this situation sooner and potentially avert the government could have stepped in just like they did with GM or other companies, and then eventually the company fixes itself and gets back on track. I think that's but it's unfortunate. But that is a major deal like that. Certainly is hurting the UK market probably, and hurting the European market a lot. So it's one of these things that tends to happen, as the market starts losing ground. It's just it's a very big deal. And it's got reverberations all over the place. And all the airline stocks are crashing today. So there's the transports we were remarking about last week are in a bit of a nosedive. Not down too badly. They're down the equivalent of about 300 points on the Dow right now, which is not too bad, but still, it's a bad omen. That the transports is starting to break down here, because they weren't able to get up enough to generate a Dow theory buy signal, and it might even be generating a Dow theory sell signal here, which would be even worse.
Can you explain to the audience, John, what that is?
Yeah, let me just pull up the trends for a second. I mean, right now the transports are right on their lows, and the Dow is less severely impacted. Therefore, the fact that the transport's leading the way down, you could argue that if we go, and this would have devastating implications. Just a second. If the transports were to go down, 500 points or so to 97, start hitting new lows, that would be new yearly lows, just about, or new lows for the year. That would effectively be a Dow theory sell signal. So that in a real sense, if the transports make a new all-time high or a new yearly high or 6-month high, and the Dow doesn't, that's generally considered to be a Dow theory buy signal.
Okay. All right, good. Because I know there's some people in the audience that aren't familiar with that term.
Yeah. So the euro and the Swiss are, higher today. The British pound's up around 125, highest level it's been in a while. Even if they quit the Brexit, quit the EU now in a month, it may not affect the currency. The currency might even have a relief rally. I'm not sure we're going to go down or back down to the 120 level again on the pound. And this trade, Trump mentioned this trade agreement with the UK this morning.
Right.
It looks like he'd be announcing it very quickly after they do leave. That could also help the currency, our currency as well. So, I think, and that tends. By the way, jeepers, remember the Tilray we talked about? It used to be one time was $300. We highlighted on this show before recommending shoring it at 280. It just can't, they just, every time they come up for air, they get hammered back down. And it looks like we're going to test the 25 level again, possibly even the low 20s on the Tilray before a meaningful rally can develop. So, like I said before, be very careful of all these marijuana stocks, because once they kind of like peak out, they're deadly, And there's probably too much supply, and the whole thing has just been overhyped to the nines. And there's a lot of illegal stuff still goes on, So it's they've got their hands full trying to make money out of that industry.
Yeah. I was aware that these dispensaries aren't able to use banking because banks are federal, and so that's created an issue for the growth of the industry. But something I didn't know is they're not allowed to deduct their operating expenses, their cost of doing business when they do their taxes. They're not allowed to count that. Did you know that?
No, I didn't know.
I mean, imagine any business out there. You just got to pay taxes on all, there's no electricity, rent, even the product that they're selling. They don't get to deduct that before the taxes are calculated.
By the way, Roku, which, remember I said be careful when the big widely held stock gets hammered, cut in half effectively. It's often a leading indicator of down market. And Roku got down to about 98 this morning. It did rally up a bit. It could be, since it led the way down, I think the Roku will be ready for a snapback here, possibly within the next few days or within a week. But it could snap back pretty strongly, especially on a if the market rebounds very strongly. So.
Interesting. All right.
So the oil is actually it's at the lowest point since the Saudi thing. So
we bring it up.
It's actually not the premium, the risk premium. I guess it's still there, but it's only $3 now, $3.50 compared to where it was before this happened. So it tells you that the supply situation has certainly been alleviated considerably, and it may be also being influenced by a possible deal with Iran.
So here's crude. Now that's just a 30-minute chart. Let me look at it on a daily here in a second. A lot of volume churning through my. Okay, so we had a gap higher open Sunday night, and that's a zone from last week. So we should be looking. We don't really have any good support, or at least as far as our zones go. This thing may be on its way to $56 from here. $56 may be the next good support we run into. What are your thoughts, John, on the downside? John?
Yeah, it could plunge all the way back. It's not something you can rule out with this crude. I'd say it definitely would if there was some sort of any kind of a talk with Iran would be very, very negative for the crude.
I'll put up on a daily here. All right, so that's daily. No, I'm sorry, that's 30 minutes. Let me make it a daily. There we go. Okay, that's a daily. All right. 56. I mean, this was the gap created by that drone strike right here. But we still haven't closed that gap. Closing that gap would be all the way down to 54.79. Huh. Well, this may be time to put out an alert, a swing trade alert. What else you want to look at?
I think that's about it, Dwayne.
All right, John.
We'll catch you tomorrow. Thanks.
All right, have a good day. All right, guys, we're gonna power through this. Go back to the S&P. Okay. Now, That's a weekly trading zone, the green. All right. All the other ones, as I explained earlier, those are last week's zones. I always display last week's zones during the radio show because the weekly trading zones are for the partners and the passport holders, but put them out to everybody on Thursday because, as you can see from the chart, even though this was last week's zone, and this, if you had jotted them down last Thursday when I gave them out to everybody, you could have put them to work Friday and Sunday, yesterday, even today. Now, this is this week's zone. So we had last night a Concierge Trade Alert. I'll put those back up if you want to grab a screenshot. We had two-sided action last night on the Concierge. 5, 4, 3, 2, 1. Got them? Okay. Now, every CFRN partner, every CFRN passport holder had these last night. The Concierge Trade Alerts. Okay? Now, what could you have done with this information if you don't already have this information? Okay? Globex opened last night, Monday night. This candle right here. This was the final, this red candle was the final candle of yesterday's day session, the Monday session. The Tuesday session began last night at 6 p.m. Eastern on this green candle. The Concierge Trade Alerts came out on this candle. No, I'm sorry. That's not right. They came out on this candle. They got out, I got them out last night at 6:35 p.m. Eastern. So that's 18:35. So we go to the 18:30 candle. I'm sorry. The 18:30 candle, that one. Here's the Globex open. Skip what I just said about the red candle. This was the closing candle of the day session yesterday. This was the opening candle of the Tuesday session, which begins Monday night, 6 p.m. Eastern. We had our first trigger. Now, if you were just working off last week's zones, if you didn't have access to this week's zones, okay, getting along at 3005, we had a zone overhead at 3013 from last week. The swing high was 3012 and a quarter. So it's a 7-point move. At $50 a point, $350 per contract traded. If you've earned the right to trade 10 contracts, and again, you got to earn the right or else you're headed for trouble, it's a $3,000 move. Okay. Important prices, important areas are almost always tested. The price gets back below the trigger, hands out 3.5 points. Back below the trigger, the market hands out 4 3/4 points. Back below the trigger, the market hands out 4 1/4 points. Okay? Now I said two-sided action. What does that mean? It means we triggered both on the long side and the short side. Remember, the way to handle Concierge Trade Alerts, as soon as they come in, you put 2 lines on your chart. Just like that, except you do it before any of this happens, right? So you got 2 triggers on your chart. Most days we have one-sided action, but there are days we have two-sided action. Yeah, possibly maybe one day out of the week. Some weeks maybe 2. Okay. So 1, 2, 3, 4 opportunities to get your goal for the day. If your goal is a couple points a day out of the S&P, well, there's 1, 2, 3, 4 opportunities to get it. Now, I've heard it said, and we talked about this last week, I've heard it said that, well, you know, that trading at night stuff, it's cute, right? You know, but real men can't trade at night because there's not enough volume. I didn't get that memo. I got the memo about what was said, but I didn't get the memo about there not being enough volume, because I'm going to show you as soon as my chart cooperates here. Okay, so last night when we got our first trigger, okay, during that 30-minute period, 13,000 S&P 500 E-mini contracts changed hands. 13,000. Oh, the next trigger, I guess we call it. Doesn't matter. You get my point. Let's go to the next trigger. 3,000 contracts in 30 minutes. And then the next trigger. 5,000 contracts. And then the next trigger. 13,000 again. Okay. So any of that noise about there not being, you know, enough volume, you know, for a real man to trade the Globex session, well, you make your own decision, right? Maybe you trade in such size that 13,000 contracts trading in a 30-minute period of time. Maybe that won't support your order size, and if it won't, I respect that. Okay. But if you're like most ordinary mortals, you're probably trading somewhere between 1 and 100. Truth be told, you're probably trading somewhere between 1 and 20. Give or take. Can't trade less than 1. All right, so that point's made. Now, this was a Concierge Trade Alert. This was a Concierge Trade Alert and a Logic 247 alert. CTAs are based on prior price behavior. Logic 247 is based on current price behavior. I went into detail on this yesterday. Whenever you have these two different ways of looking at the market, pointing at the exact same number or even the same area, it really deserves a second look, okay? Led to a 30-point drop. That's right. 30 points. 29.91 down to 29.61. And that's a this week weekly trading zone. Now, if you were trading off last week's zones, 29.91 down to 29.83, that's an 8-point move. It's the same move we had yesterday. Yesterday, today. Now, I mean, look real quick here. That logic, consider being, okay. So CTA is 3005. And last night, the companion to that was 3006. So we had logic and CTA both on the long side and the short side. Okay. CTA, previous price behavior. Logic, current price behavior. Okay. And when the two are pointing at the same number or area, it's really worth a second look. Now, we talked about, as we were starting the show, we talked about what would happen when price on the S&P got down to remember, we talked about it coming down to the BBC, where we expect that to be good support, right? We said it might actually spike the BBC to touch that 24% fib retracement, which lines up perfectly with the price where we had the bearish cross. So I gave you all the reasons why I thought we'd get a bounce here. Now on the daily candle, you might go, oh, gee, that doesn't look like much of a bounce. Well, let's go back to the 30-minute. From this weekly zone, which is also the 24% fib retracement on a daily chart, it's also the BBC on a daily chart. Here on the 30-minute chart, it's a this week weekly trading zone. The swing high, the bounce, the bounce took us up to 68.50. So a 7.5 point bounce back to the zone, again confirming good support. And so now we've bounced 6 points. Can't see it on the daily, but you can certainly see it here on the 30-minute. Okay, real quick. On the Dow, last night, Concierge Trade Alert was 26,900. That's going to be right about there-ish. 26,900. And we're down to 720. So it's at 180 Dow points at $5 a point. Hey Alexa, what's 180 times 5? Hey Alexa, what's 180 times 5?
180 times 5 is 900.
Thank you. All right, $900 per contract traded. Okay. That's per contract. Okay. Did we trigger on the long side as well? Oh, the long side was 27055. Sure did. Went up to 27,112. About $350 per contract traded. 250 here, that's just counting one of the triggers. We triggered multiple times. And then $900 down move. Now, if there's anything about any of this that anybody doesn't understand, well, he's typing in the chat box. I got to go here in just a few minutes, but I'll be happy to answer your question. Okay? Just to make sure there's no mistake. Last night, every CFRN trader was told to consider getting long at 3,005. Every CFRN trader and passport holder was told to consider getting short at 29.91. If you are not achieving this kind of a result, or even a positive result, you know, maybe you're still trying to find your place in the world, the trading world. You're still working hard to just get those 2 points a day. And I heartily recommend to everyone, whether you use our methodology or not, let that be a starting point. Okay? Don't try to hit home runs. Don't go for 30 points right off the bat. Learn to consistently take a couple points a day out of the S&P, day after day after day, until such a point you can't remember the last time you didn't get your points for the day. And then you can start thinking about some of the bigger moves. But it's just a great starting point, no matter what methodology you use. Learn to be consistent. Now, we all want consistent results from the market, but most of us, at least in the beginning, we don't give the market a consistent effort. See, we got to give what we want to receive. We got to be willing to be consistent in our effort so that the market can actually try to give us a consistent result. Okay? So if your chart doesn't look like this, if your methodology or strategy or indicators or whatever it is that you're using, if it isn't presenting you with these types of opportunities and teaching you how to trade at the same time. Well, we're here. 949-42-EMINI. 949-42-EMINI. Or email Val, support@cfrn.net. Should get you squared away. If you've taken the trial, okay, nothing's changed, ask her for a price sheet and a spec sheet. You could have the Concierge Trade Alerts in front of you tonight. You can start taking advantage of these types of moves. Now, this isn't an unusual day. Okay? Well, dropping 30 points in a session, that's a big day, but it's not unusual. If you're watching this recap right here, right now, live in real time, you can also go and watch yesterday's recap, youtube.com/CFRN. But hey, maybe we're having a lucky week. So go back a month. Pick a day at random. Watch that one. Go back 6 months. Pick a day at random. Go back 3 years. Pick a day at random. Now, I'm not bragging or boasting because there's nothing to brag or boast about. Once you understand how markets work, this is just another day at the office. No need for a parade or hire a band or any of that. It's just another day at the office. If you have good results, if you are consistently profitable with your trading, that's excellent. If you are not, you don't have to go it alone. There is help available. Now, somebody just giving you numbers to trade, okay, that might cure you for today, but what about tomorrow? I mean, you have an opportunity to have high probability trade setups in front of you around the clock. Logic 247 runs 24/7. You have an opportunity to have this information in front of you while you're learning how to trade. With us, those two are inextricably linked. We never want to create a dependent society. We don't want you to, be out of business if we take a day off, or, no. This is your opportunity to take control of your financial destiny. If you have any questions, get hold of Valerie. She'll be happy to answer them for you. Okay, real quick. On the Russell, Concierge Trade Alert said to consider being short 1559. Well, there's 1559. From 59 to 39, 20 points, $50 a point, $1,000 per contract traded. Gold. Last night's alert, consider being long 1533, swing high 43. That's $1,000 per contract traded. Okay. Crude. Oh, we already did crude, right? Did we already do crude? No, we did not. Crude, consider being short 58 and a quarter. So 58 and a quarter right here. Okay. At 57 and a quarter. At 57 and a quarter, right there. That's $1,000 per contract traded. It's one thing to put on a profitable trade, but it's a much better thing to understand why you're putting it on, why it's a high probability setup, and then discovering how to find these gems on your own. All right, so the S&P, did the Dow, did the Russell, did Crude. I guess the only thing left is the NQ. Okay. So the NQ, CTA, consider being short, 78.35. 78.35. All right. Alexa. Alexa? What's 78.35 minus 77.04?
7,835 minus 7,704 equals 131.
Alexa, what's 131 times 20?
131 times 20 is 2,620.
Okay, so this is a $2,600 per contract move. $2,600 per contract. If you've earned the right to trade 10 contracts, this is a $26,000 move. The alerts go out before it happens, just in case there's any confusion. All right, guys, listen, I got to run. I'm going to make a video later today. I got to make a couple, but I'm going to make one in particular where I go into a little more detail on the recap here. I'm just pressed for time today. Thank you so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no group discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.